Good evening, this is WION Wallet and I am Sumit Chaturvedi. Let's start with our top headlines. RBI keeps key rates unchanged, announces all limit on cash withdrawal will be eased from March 13. The central bank also cuts FY17 growth forecast to 6.9%, pegs 7.4% growth for next year. Telecom wars get murkier. Bharti Airtel approaches the Prime Minister's office, claiming that Reliance Jio's constant complaints about insufficient points of interconnect were its own fault. Disappointed over no change in interest rates in RBI's policy, Indian markets end flat. Now straight to our top story. Reserve Bank of India, widely expected to cut the repo rate, has kept the key lending rate unchanged at 6.25% today, opting to wait for more clarity on inflation trends and on how Prime Minister's crackdown on black money is impacting economic growth. The central bank has been under constant pressure to lower borrowing costs to boost the economy. Well, with the notes ban expected to drag economic growth to a 4-year low for the year ending March 31st, the RBI said that all 6 members of the Monetary Policy Committee voted in favor of the monetary policy decision. Well, the Monetary Policy Committee has also changed its policy stance to neutral from accommodative, which signals that RBI could go for a prolonged pause on further cuts. Well, the RBI also cited its concerns over inflation for its policy stance. Excluding food and fuel, inflation has been unyielding at 4.9% since September.
Hello everyone. I just wanted to make 2 points.
Well, RBI Governor Urjit Patel today cut the economic growth forecast to 6.9% for the current fiscal from 7.1% estimated earlier, even as he said the economy will bounce back to 7.4% rate next fiscal. Well, the economic growth is expected to recover sharply in 2017-18 on account of several factors. In its last monetary policy on December 7, the central bank had cut growth forecast to 7.1% from its earlier projection of 7.6% for this fiscal. Well, the Apex Bank also said that discretionary consumer demand held back by demonetization is expected to bounce back in the closing months of 2016-17. While economic activity in cash-intensive sectors such as retail trade, hotels and restaurants will also, and transportation, as well as in the unorganized sector, is expected to also be very rapidly restored. The RBI has said this. Well, we'll discuss this today with our 2 esteemed guests, Krishnamurthy Subramanian, who is member of Board of Directors at Bandhan Bank, and Pradeep Chaudhary, who is a former CMD of State Bank of India. But first with Mr. Subramanian. Sir, good evening. First of all, we would like to know from your side the reaction to this step of RBI today.
Good evening, viewers and Sumit. So I actually am quite, in agreement with the Reserve Bank's policy stance, in particular signaling that that there may be a change in the stance from accommodative to more neutral. I think there are primarily 3 factors that are guiding the Reserve Bank in changing this policy stance. In particular, the first factor being the fact that commodity prices are seeming to firm up, starting from the crude and other commodity prices, which may fuel inflation. As you as you know, now the Reserve Bank's important objective, the most important objective, is to keep inflation within the range specified by the government. So that's the first important factor. The second factor is actually the uncertainty regarding macroeconomic policy, particularly, on the U.S. side, with Donald Trump and the dispensation under Donald Trump, what they would do in terms of, would they actually continue the quantitative easing or pull it back, is something that is uncertain. And usually uncertainty would then lead the Reserve Bank to sort of hold back and wait for more clarity on that side. So that's the second factor. Third, as the RBI governor was saying, that inflation is also, if you leave out food, inflation is sort of stubborn at about 4.9%. So these three factors really mean that the Reserve Bank has to change its policy stance from being accommodative to neutral. Also, it's quite relevant that the governor mentioned that about close to 2 percentage points decrease in the policy rate has not been accompanied by banks cutting rates. So the transmission of monetary policy, which has been very weak in the economy, despite the shift from the average to average rate regime to the MCLR, the marginal cost lending regime. So the only about half of that decrease in the policy rate has been transmitted. So even though the Reserve Bank continues to sort of hold back, there is still room for for interest rates to decrease by banks passing on some of the decrease in the rates to their borrowers. And I think they should be now doing it, given the amount of the large influx of deposits that has come in from the demonetization. I'll just close for now by making one point. Historically, what has been seen is that particularly our banks, whenever there's a flush of liquidity, when there's of cash, there's indiscriminate lending. I hope that does not happen, and the Reserve Bank keeps a very close eye on that.
So we'll go to our next guest, Pradeep Chaudhary, who's former chairman, State Bank of India. Good evening, Mr. Chaudhary. You have been at the helm of SBI for long. How do you see this move? And in addition to that, government has also said that for next FY, the growth of economy will be at 7.4%. How optimistic are you?
No, this is RBI's analysis, and they have very capable team of economists. So I think this should be right.
And also, what they have said today is that the 6.9% is going to come down to 6.9%. Well, before that, other agencies, including World Bank and IMF, they have also brought down the economic growth forecast to 6.9% to 7.2%, 7.3%. So here, till what time it's going to happen?
No, it is, you ask them, it is their forecast. So how can I comment on somebody else's forecast?
And how do you...
generally there is a divergence between World Bank and IMF forecast, because World Bank forecast projects a little higher because they are growth-oriented people, and IMF is more conservative, so IMF forecasts are low. But I think this is a wasted opportunity. Reserve Bank could have as well cut the repo rate aggressively by 1% and could have reduced the CRR by 1%. There is a shortage of physical cash, but at least liquid cash in the economy could have been increased, because the requirement is now to increase consumption. And with crude prices remaining relatively low, and the Rabi crop is expected to be pretty good. So with this, I think the inflation possibilities are rather low, and everybody, even RBI, is predicting an inflation of less than 5%. So there was an opportunity to, lower the interest rates so that it could spur demand for housing, education, vehicles, etc. But I think Reserve Bank has, wasted this opportunity.
And also today, the cash withdrawal limit for saving banks also has been relaxed to a large extent. How do you see the whole process of demonetization? Do you think that we are very much back to the normalcy now?
Back to the previous level, it is good for RBI, but many people have lost jobs, and demand has shrunk, and even government accepts that it has led to a slowdown. And no country in the world tries to curb consumption. In fact, people, most of the countries are trying to raise consumption. And you look at our levels of consumption, because China, which is say 1.25 times our population, sells something like 14 million cars a year, and we sell something like 3 million cars. So we are 1/4 of China. You look at coal, you look at cement, our consumption levels are so abysmally low, and yet RBI is doing everything possible to put brakes on consumption.
So coming back to you, Mr. Subramanian, how do you see these two steps further taken by RBI today? First, that the growth forecast for the economy has been now pegged at 7.4% for the next year, and also cash withdrawal limits have been eased to a large extent for the other people as well, for saving account holders as well. How do you see these two big steps?
So let me respond on the second step. I think that is something which was expected, given that now there's been a few months that have passed since the demonetization. We would expect the economy to come back to normalcy as soon as possible. And so easing the cash withdrawal limits, I think, was par for the course, something that was expected, and the Reserve Bank has done that. In terms of the growth forecast, I think, it's the decrease in the forecast for this year to 6.9% is something, again, that is expected, given the short-term pains from demonetization. That the decrease in growth is something that is expected. Though I would like to actually disagree with my fellow panelist here on most of the comments that he's making in terms of whether it's demonetization, inflation, etc. You have to remember that the Reserve Bank's mandate is to keep inflation at the mean of 4%, between 2 to 6%. So in that sense, it is important that the Reserve Bank keeps an important eye on inflation. I think in India, a lot of commentators generally put a lot of onus on the Reserve Bank to foster growth. World over, it's been seen that the growth is actually driven a lot by fiscal policy, not as much by monetary policy. In the best of times, monetary policy is a blunt tool to foster growth. And so asking the Reserve Bank to do everything, keep inflation under control, growth, everything, I think is asking for too much. Inflation, the current monetary policy regime is right to target inflation, and the Reserve Bank is doing the right thing.
Well, back to Mr. Chaudhary. Mr. Chaudhary, in budget, there was no big announcement for corporates or industrial sector for investments. Second, today also the interest rate was not cut as much as expected. Do you think they are not paying any heed to the demands of the corporates, or they have something on their own which is going on in their mind? What's your assessment of that situation?
No, I think everybody would like a zero interest rate. But then how do you pay high interest rate to depositors and charge lower interest rates from the borrowers? So there has to be a balance between the two. The government post office savings rates are whatever level, and if bank takes their deposit rate below that level, so there would be no deposit. So that's why the banks are constrained, that they can't. And again, some relief could have been given by way of repo. RBI chose not to do that.
And also, Mr. Chaudhary, what is the situation as far as reprinting of notes is concerned, recalibration of ATMs is concerned? Do you think the whole exercise is now over and we are back to
I think RBI can say. This is an insider's job. Don't ask me. I have no knowledge. You should have asked the RBI DG.
The closing comments I would like to have from both my guests, Mr. Prateep Chaudhary, from you, sir, first. What are your closing comments on today's decision taken by RBI?
It's a wasted opportunity. It was a fantastic opportunity to spur growth and investment, but RBI has blown it.
And from you, Mr. Subramanian, what are your closing comments on all these three steps which have been taken by the Reserve Bank of India today? What are your assessments and what are your closing comments on that?
I think the Reserve Bank is on the right path. I must, reiterate again that it's not the Reserve Bank's main mandate to foster growth. Their mandate is to actually to keep inflation in control. And even at the best of times, monetary policy is a blunt tool to foster growth. So in trying to ask the Reserve Bank to foster growth, I think the effect on inflation may be significant. Therefore, what the Reserve Bank has done is right.
Well, thanks so much to both our guests. And now moving on further. Now, Singapore Airlines, the Southeast Asia's biggest carrier, has posted a 36% drop in third quarter profit as passenger numbers declined and the company wrote down the value of a budget unit's brand, which was Tiger Air. Well, the marquee carrier, Singapore Airlines, which is battling overcapacity and aggressive pricing by budget airlines locally and Arabian Gulf's big three Etihad, Emirates and Qatar Airways said 2017 will be another challenging year amid tepid global economic conditions and geopolitical concerns, while Hong Kong-based rival Cathay Pacific Airways said last month it will eliminate some positions as part of a business review, with the key changes set to kick in by mid-year. To counter some of the challenges posed by Middle East and budget airlines, Singapore Airlines has been adding fuel-efficient aircraft to its fleet and teaming up with other carriers to offer more destinations. The carrier marked its inaugural flight of its Airbus A350-900 to Amsterdam in May last year. Singapore Airlines' net income in the 3 months through December fell to $177.2 million from $274.9 million a year ago, with the drop attributed to a $79 million write-down due to a rebranding of Tiger Air. Well, now let's go to Brexit. Global banks in London may have to relocate $1.9 trillion of assets to the continent after Britain withdraws from the European Union. Well, putting as many as 30,000 UK jobs at risk, according to Brussels-based research group Bruegel. Well, the assets potentially on the move represent 17% of the UK banking system. Well, Bruegel has said this in a report published on Wednesday. Well, based on discussions with market participants, the researchers estimate that 35% of wholesale banking activity in London can be attributed to dealings with customers inside the EU. Financial firms will have to move that business to countries inside the trading bloc. Well, after the UK leaves the EU in 2019, likely spelling the end of passporting, where firms seamlessly service the rest of the single market from their London hubs, banks and their clients are most concerned about a cliff-edge Brexit, whereby all access is cut off after 2 years. To safeguard against that loss of access, banks are already in discussions with European regulators about setting up new bases inside the EU and have said they will start the process of moving people within weeks of the government triggering Brexit talks expected in March. The steelmaker Tata Steel swung to a profit in the third quarter, the first gain in 5 periods, boosted by a recovery in product prices and higher production. Well, Tata Steel's group profit was Rs 320 crore in the 3 months to December 31st from a loss of Rs 275 crore a year earlier. Global mills such as South Korea's POSCO and India's JSW Steel have seen profits jump after steel prices advanced because of government stimulus in China, the world's biggest consumer. At the same time, a ramp-up in capacity in India saw volumes increase, boosting sales of local mills. Tata Steel costs advanced 3.9%, while finance costs rose 4% in December. Tata Steel struck a deal with unions to secure future production and jobs at its Port Talbot plant in Wales and other UK sites. As part of the deal, in November, Tata also said it had started talks for the sale of its UK specialty steel business unit to Liberty House Group business for $124 million. The mobile payments and commerce platform Paytm will reach out to offline sellers with QR code for payments. Paytm has said it will reach 1 crore offline sellers with its QR code offering for payments. Currently, 35 lakh merchants, including organized retailers, hospitals and other stores, use this facility for their businesses. The number of offline merchants in November was close to 1 lakh, and the company had hired 10,000 field force to ramp up the number of offline users post-demonetization. Paytm is touting its QR code payment system as an alternative to point-of-sale machines, which are expensive and take longer timelines to deliver. QR code-based payment is linked to verification documents and KFC collected for each business. Hence, an individual running multiple businesses can track the transaction for each business, avoiding duplicity. Now, shifting gears, government is keen on implementing vehicle policy that aims at scrapping 15-year-old commercial vehicles in the first phase, and it also said it will send these vehicles and the proposal of the vehicles to GST Council after Cabinet nod. Voluntary Vehicle Fleet Modernization Program policy has proposed to push 28 million decade-old vehicles off the roads. While government is trying to bring the policy as early as possible, Road Transport Ministry will make a representation before the Cabinet Secretary on Feb 9 and then before the PMO. After the Cabinet note, presentation will be made before GST Council. The scrappage policy proposal is to provide relief of about rupees 5 lakh to people who purchase new commercial vehicles of about 15 lakh rupees if they surrender their over 15-year-old vehicles that was commercial use. The policy will result in rupees 10,000 crore boost in tax revenue, and the automobile sector turnover will grow from rupees 4.5 lakh crore to rupees 20 lakh crore after policy implementation. Well, now some news from Telecom. The Telecom Commission has asked the Department of Telecom to seek clarification from the Telecom Regulatory Authority of India on the rupees 3,000 crore penalty on three service providers Bharti Airtel, Vodafone and Idea. Well, the penalty is for allegedly denying interconnectivity to newcomer Reliance Jio. The clarification has been sought on the recommendation of experts panel set up in the Department of Telecom. Besides, the Telecom Commission also approved demand of 2,800 crore to be raised from those telecom operators who provided services between the period Feb 12 when the Supreme Court cancelled their licenses until the time they procured fresh permits. Well, after buying spectrum in auction, that happened. Well, let's take a short break at this moment. After the break, we will focus on Indian and global markets.